6 interest rate cuts coming in 2024. Hey everybody, my name is Michael Reyes and I'm here just giving a quick market update regarding the article. A lot of articles have been going around, but Business Insider actually wrote an article regarding Federal Reserve interest rate cuts projected for 2024. Now this article discusses that 6 cuts may be coming in 2024 because it says right here in the title, the economy shows clear signs of cooling. I'm just going to read one of the opening lines. An economy that is showing clear signs of decelerating means the Federal Reserve will cut interest rates at least 6 times in 2024. To a Thursday note from ING Economics, moderating inflation, a cooling jobs market, and deteriorating outlook for consumer spending means the Fed may need to cut rates more than the market expects. You guys, this is really an interesting projection. Now, again, this is just a projection. What is going to happen in 2024? Everybody's trying to do their best prediction. Nobody really knows. Obviously, Jerome Powell is the guy in charge right now, but nobody really knows what 2024 has in store for us. However, it is a sure thing that if this fourth quarter GDP numbers come in lower than expected, then yes, there will be interest rates coming in 2024. Will it be 6? And then if it's 6, what is it? Is it 0.25? Is it quarter basis point? Is it, how much total is it going to be cut? Now, a lot of people may not know exactly what that equates to. Now, the federal interest rates, whatever they are at, when it comes to real estate mortgages, typically, just for a ballpark number, you can add 2 points to that. And that's what will typically be the 30-year fixed rate, national average, if you will. Okay. So again, right now, the Fed is at about 5.5 interest rate. And the national average for a 30-year interest rate on for a mortgage is at about 7.5%, right? Now, depending on credit, depending on down payment, depending on all these different things, your final loan product varies. But on average, 30-year fixed for a mortgage on a house is sitting at about 7.5% for the United States. Okay, so when it comes to real estate, when this news comes out, we kind of look at that. Okay, what is the projection? And then for the federal interest rate, and then we can add typically about 2 points to that every time. And you'll get right around where we will land. Now, with this said, the question, again, this is just speculation, but what does this mean? For buyers, this is not good news because our prices here in Silicon Valley have not come down a lot. There are certain pockets where it has cooled off a little bit. Really Morgan Hill area, there's a lot of listings, a lot of inventory. So the prices there have really adjusted. However, if you continue into, San Jose and the greater part of Santa Clara County, the inventory level has really been at like half of the average for the past 10 years. So our prices have not bottomed out. They have not dropped dramatically, especially in comparison to how much they rose during the zero interest rate era, the COVID era, where the Federal Reserve was at, 0 points, and man, people were getting 2.97 on their loan. Seems almost crazy, but that was just a few short years ago, right? And so these things take time. And so the question is Jerome Powell, is he going to be steadfast, and is he going to not, change the interest rates and let the economy go through some hard times, or will he ease up if these numbers come in for the fourth quarter, if they come in really bad? We don't know, okay? But I do know this, for the real estate market, if interest rates cut, even if it ends up being a total of 1% by the end of 2024, that means nationally we'll be sitting at about 6.5%, somewhere in between there for a 30-year fix, which really means what people are doing are getting like 10-1 ARM, 7-1 ARM products, which are typically maybe even almost a point lower than that. Right now, we have people getting 6.25, 6% on 10-1 ARMs right here in the Bay Area for houses that we're getting for them. And so if the national average ends up being about 6 or 6.5% next year, that means people will be locking in maybe 5.5% on a 10-1 ARM. It sounds like, hey, that is actually better for buyers. It's not. When the prices of the homes have not adjusted accordingly, they haven't dropped yet enough in comparison to how much they rose because there's not enough inventory. And so what has happened with the rising interest rates, a lot of the buyers, the competition, have been removed from placing bids on homes, which has allowed the homes to not drop, not bottom out in price. But what that has done is slowed down how much they've gone up, which that's a good thing. However, it hasn't taken long enough to really compare to how much they rose, right? So if we see interest rate cuts in the next 12 months, the value of the homes will shoot up again, because once those interest rates comes, more buyers are back into the buying pool, and we are already at a lack of inventory right here from Silicon Valley. So for homeowners, it's great, but the main question homeowners ask is, well, where am I going to go? Because it's so expensive to move somewhere else. And so it's like, hey, I'm not going to move it because it's so expensive. My property taxes are low. Where am I going to go? That's the number one issue right here in the South Bay, Silicon Valley. And then more buyers will come into the buying market. And so we still already have more buyers who want to buy a home than how many homes are for sale. And if these interest rate cuts come 6 times next year, and that sounds like a lot, but again, it could end up being just a total of 1 point, which, in other areas of the nation might be great. They may have really slowed down and really stalled out. Here in Silicon Valley, we haven't. And we are our own economy because of all the tech, because of all the jobs. And you guys remember just recently, we had all these headlines of Facebook laying off tens of thousands, and Google, and everybody laying off, and we thought the economy was going to crash. Well, we got through all that, and really the housing market really hasn't dramatically changed. We haven't seen a dramatic drop in prices. There has been a decrease, but not, again, in comparison to how much they rose during the zero interest rate era from the Federal Reserve recently, just within the last 5 years. So again, what does this mean? This means if this happens, home prices are going up and more buyers are coming into the market. The main X factor is how many sellers are going to put their home up for sale and move to other areas. That is an X factor. We are at, half, almost half of the average for the past 10, 20 years here in Santa Clara County. And that's, a main reason for the prices remaining very strong where we live, right? So again, Business Insider, I'll put the link to this article in the description. You guys read it, some good information there, but keep in mind, it is a projection. What is going to happen? It does look like Q4 is going to have less GDP, and so that is almost for sure thing. But the question is, how is Jerome Powell going to react to it? Is he going to try to heat up the economy and cut interest rates? Well, again, here in Silicon Valley, we are our own economy, and this again, may not be great for our local area. But again, it's all speculation. We will see, So if you guys are looking for more information, feel free to like and subscribe to this video. Check out some other videos, some helpful tips for sellers. If you are looking to get the most amount of money in the least amount of time, we've got some tips for you here on this channel. Buyers, if you are this is a competitive market. I got a video for you as well on how to make sure you're making offers so you will not lose the home that you love. Again, thank you everybody for tuning in. My name is Michael Reyes, licensed realtor right here in California.